you have to make a decision today. Is this what you would continue to choose every single day, or is there something else that you might like to do more?
Welcome to the Fiscal Foxhole, the podcast proving you don't need a degree in finance, just some grit, a game plan, and maybe a sense of humor. Your hosts are retired Army veteran Rob Moore and retired Marine veteran Omen Quelvog. Together, they'll help you dodge financial landmines, call in the air support on your savings, and laugh at the ridiculous money mistakes we've all made. If you can survive mandatory fund days, you can survive personal finance. Welcome to the Foxhole.
Welcome to the Fiscal Foxhole, and Happy New Year once again to my battle buddy, Omen Quelvog. Good to see you again.
Good to see you too, Rob. It is a nice cold day, still cold day here in January. Second episode in to the new year. I love it.
Yeah, it's good. We're back to work. Everyone's back to work. I actually had to drive into work this morning. Well, I guess the old work, the Army work, for a buddy of mine who's retiring, and the traffic wasn't as bad as I expected. I was clutching the wheel, just waiting to be in that old, DC, that old tried and true traffic of DC. And it wasn't too bad. It wasn't terrible, but I definitely don't miss that commute. But it was nice to go in and see some old friends in the new year. They were just getting back to work as well.
Well, so because you went back into work and we just recently found out that you're still active duty, technically, did you throw on the uniform for this?
No comment.
What? No, you definitely needed to throw on the uniform.
I needed to. I did not. And guess how many people called me out on it? 0.0. Yeah, no one.
I'm calling your boss because he's still your boss. I'm calling your boss.
Go ahead. Yeah, that's great. He can send me a sternly worded email that I'll get around to here in a couple days. Well, speaking of January, you were talking about New Year's resolutions, and you brought up the fact that you make resolutions throughout the year, but you also brought up that January 9th was Quitter's Day, which we just finished. It was a couple days ago. So is it time for me to start interrupting you again? That was my resolution. So I'm curious in this podcast if I'm going to be interrupting you. We'll see.
Are you telling me right now that you are just giving yourself free rein to interrupt me?
No, I'm going to actually intentionally not, so I have the pride that I didn't quit. I'm pretty good with my resolutions. I stick with them even if I don't. That's going to sound terrible, but I don't achieve exactly what I want.
What if I interrupt you right now?
Good. Take it, man. If I don't have to talk, go for it. But something else that popped up in the calendar for January, as we were looking, this is kind of fun that maybe we could do this more often, but we looked up January 14th, which is the date of this podcast here, just to see if there was anything else significant. And it came up with the fact that, and this is brand new to me, but January 14th, 1784, was the date that the Continental Congress ratified the Treaty of Paris, officially ending the American Revolutionary War and recognizing U.S. independence.
1784, not 1776.
Right. Yeah.
So are you telling me that this country is not 250 years old this year?
Yeah, I guess if we worry about what the rest of the world thinks, right? Which I don't think the USA has ever done. So no, I'm saying 250, sticking with it.
250?
Yeah, I'd say we were independent when we declared it. Who cares what the world thinks?
That's right. That's usually how we say things, right?
Love it.
U.S. said so.
Yeah, I like that. So that's kind of interesting. I was kind of unaware of that. I'd heard of the Treaty of Paris, but I guess I need to get kind of better about U.S. history. As I get older, it gets more interesting to me, or I get more interested in it. So this is definitely was something that something that I really appreciated. But today we have some business to get to. We're excited because today we have a guest coming back, and I think it's appropriate. This is our first return guest, and I think it's appropriate because this was our first guest in the Foxhole.
I'm, again, really excited to have Brandon back. I look at this as an opportunity. I think that Brandon, maybe the first time he came on in episode 3. I think the first time he came on was really more of a pity interview. He just look at these guys. They have a cute podcast, and perhaps I'm going to just join in and after 5 episodes, they'll be done. But actually, we're getting up there in the number of episodes. This one actually is number 17. Can you believe it? We have 17 episodes.
Yeah, he probably thought that our Quitter's Day was shortly around the corner, I'm sure. But here we are, despite the odds. Yeah, we're having Brandon back in the Foxhole. He's coming over here in a bit. last time we talked with Brandon, he talked about his experience in juggling the idea of waiting it out to 20 in the military. He got to that year, the 10, 11, 12, which is pretty common. You're like, hey, should I stick this out to 20? There was a lot of really great insight that he provided in his own journey. And he also broke down the numbers for other folks too that might be in a similar situation. Today, we get to hear about his decision to stay past 20 or not. What is it out there for you as an individual, what your values, and of course, the monetary aspect of staying past 20 and what that does for your pension, et cetera. So we've got some really great questions. We are a little bit more experienced now. So I think that this interview might flow a little bit better. The last one was great, but obviously we've got a little bit of experience doing this. So we'll see how that shakes out.
If you haven't listened to episode 3, I highly encourage you to go back, listen to episode 3. That his insights are just invaluable. And then, as you said, Rob, I mean, who hasn't asked themselves the question, if I go over 20 years, am I just working for half the salary? Yeah. That is the general question. So I'm excited to ask that of Brandon and how he thinks about that.
Yeah, no doubt he'll have some really insightful things for us to carry forward. Also, go back and listen to episode 3, because I think that was the one where I did all the sound effects at the beginning. We were cleaning up the foxhole. I had a lot of fun doing that. Who knows how well it came out? I don't know, but it was a lot of fun to do. But before we get down to business with Brandon and bring him over to the foxhole, we have some news to take care of. Today's news headline. Omen, could you please read the news headline and who wrote it?
Nope. I wrote this one just for you. Go for it, Rob.
If you've listened to the podcast, you know that Omen loves to throw articles in with people's names that I cannot pronounce or I have to take the best guess. So today is no different. The headline for today is, quote, Review of the Markets over 2025 by Max McKechnie from JP Morgan. Last name McKechnie. If you're annoyed that I spelled that out, then send an email to fiscalfoxhole@gmail.com and let Omen know that you are annoyed as I am. Anyway, as the article presents here, quote, markets dealt with many cross currents in 2025. The first half of the year was dominated by trade concerns as the U.S. raised tariff rates to levels not seen since the 1930s. Developed market equities fell 16.5% in early April, but ultimately shrugged off the impact and ended the year with a return of 21.6%. In the second half of the year, markets focused on the positive implications of fiscal and monetary stimulus. Risk on sentiment drove an everything rally, and 2025 was the first year since the pandemic where all major asset classes delivered positive returns. Cue snoring noises. Obviously, there's a lot of data here, a lot of interesting things. If you're an egghead that loves this type of stuff, then some of that might have resonated with you. For the vast majority of you, everything I just said probably sounded like the trombone from the Peanuts. But what we want to do is we kind of want to use this article and the information within to talk about market returns and how we look at it as investors.
I love this article, and I know there are a lot of financial advisors right now talking about what we learned from 2025. Ultimately, what we learned from 2025 is the same thing we learned from 2024 and any other year before that. So first and foremost, none of this is specific investment advice. This is broad education for investments. So we're not telling you to invest in a specific thing when we start to go through some of these numbers, but it is education over investments in general that ultimately, when we back out of the market and we actually look at why we're investing and what we're investing in, this is just more evidence that we have no idea what is going to happen year to year. We have some predictions. We made some predictions even in our episode a couple of episodes ago about what might happen in the market, but we have no idea what is going to happen. We didn't know what was going to happen around tariffs. We didn't know that the stock market was going to continue to have its bull run through 2025 and have a great year. We didn't know any of that. So we have to be careful about how we approach the market, that we are not market timing. Whether you are in equities, whether you're in fixed income and some percentage of each, we're simply encouraging you to take part in the market, but not have those feelings of, oh, I should have invested now, or I should have moved my money to cash at this time. How many people during COVID thought, in March of 2020, there's this news starting to circulate about a pandemic potentially. How many people thought, you know what, maybe I should move all my money to cash? Nobody. So like we're telling you, had you done that and a month later had all your money in cash, you would have missed out on all of the gains that occurred 3 weeks earlier. So this is not a story about how you can do better in the market by investing in this certain thing. This is more of a story about how you can just do better by staying in the market.
On top of that, there will always be the I should have. Always. I don't care how well you do, how good of a stock picker you think you are, or how good of a year you have. If you're an active trader, if you're a day trader, or if you're an active fund manager and you're listening to this, like I don't care what kind of year you had, there will always be like, oh, but I could have gone back and put more in NVIDIA, whatever. That was like the hot thing for the last few years, right? So there's always the I should have put it in cash. I should have. You can always do that. Even if you had a personal return of like 30 or 40%, even if the market was down and you were like making money hand over fist, there's always the regret of going back like, oh, this would have been better. That will always be the case, right? So to your point, like you said, we're not encouraging you to, you can't predict it, so therefore pull out and don't do it. It's be in it, just don't play the game. Like don't just find the asset classes that align to your goals and your dreams, i.e. the ones with the right amount of risk historically compared to the amount of return historically. It's the best we can do. And then try to project out from there long term, because we have long-term results over the last long term. So we try to predict that out over the long term going forward.
Yeah. I mean, if you, just for kind of last evidence here, if you thought that, man, I should have been in for 2025 because look at how strong the market is. Just for comparison, 2025 US stocks overall, a 17.1% gain. Back in 2022, however, it was a 19.5% loss over the year in the same equity class. So don't, I should have been in this. We're just saying be in it over the course of time, because ultimately the market goes up more than it goes down. How many times have you heard over the course of the year that the market reached new highs? It's going to reach new highs. And it generally reaches new highs. I think it's 3/4 of the year, Rob, that it reaches new highs. So it reaches new highs well more than it reaches low lows.
Right. It's almost like noise at this point. New highs. New highs is what it's supposed to do. Because, right, the companies are getting bigger, profits are getting higher, inflation has its toll. It kind of helps the market out too. So, as the market goes up, we know it goes up over time, or at least it always has. That's the quote I say. Pending some terrible cosmic disaster or the end of the country, God forbid, like that's traditionally what we expect, because that's what we've observed over the long haul. Getting back to the prediction side of things, this is a historical review of 2025, and it basically kind of just breaks down what happened in 2025, right? Like I said, we're using this as a vehicle to talk. But let's go back to the beginning of 2025. This wasn't in the article. I pulled this off independently to support our talk about not trusting forecasting so much. I went and pulled some forecasts from early 2025. Now, these aren't as bad as I thought they were going to be. I wanted to go back and find some really bad ones, but these actually were kind of okay. So to sum up what happened by the end, real quick before we get into predictions, like you said, the S&P was up 17%. It closed at 6,845 on the last trading day of 2025. The forecast that I pulled here, one's from the Wall Street Consensus in December 2024, said that the average S&P target would be 6,600, not terribly too far off. It predicted a 10% upside from 6,000 at the time. Goldman Sachs forecast a 9% return, so I was off from the 10%, the 17%, with a target of 6,500. So they were both predicting up, but missed the mark by almost half, right? Jeremy Siegel from Wharton actually predicted a market plateau, 0 to 10% returns. So he's a little bit more conservative with his, with a potential 10% correction. We talked about that the last episode, correction that's probably still out there for us. And he said tech could soften. The correction in the tech softening did not happen. We got, like I said, 17% return. And Morgan Stanley said muted but positive, high single digit to low double digit returns. Watch AI and valuation signals. Wow, they got that right. AI kind of, like I said, buoyed the growth in the S&P 500. So here you see they're all kind of around the same 10% growth, which if you look at the last 5 to 10 years of the S&P 500, it's a little bit of a cop-out because that's kind of historically what we experienced over that time.
Yeah, I don't think anybody ever could have predicted. And here's the thing is like when the market does as well as it did in 2025, nobody's actually going to go out on a limb and say, you know what, I think the market is going to be up 20% this next year. Like how often does the market actually go up by 20%? It's rarer, right? Rarer. But I mean, if you would have not been in the market during this past year, for communications and IT sectors specifically, their returns 33% and 23.6% respectively. Like that's huge. That's huge. And this is, again, more of an indicator of like maybe a little bit overvalued there. Maybe something's coming in terms of a correction, but like you still got to be part of the gains. This is not now the time, and I'm not telling you not to get invested in the market at this moment, but it's like, oh, they're so high, I missed out. Now I'm going to invest at a time where now all of a sudden, well, maybe the market softens a little bit in AI and tech sectors, and you might lose out. This is why we say just invest, and do this slow and steady. I like the analogy of crock pot investing versus microwave investing.
That's a good, I haven't heard that one. That's nice. I'm glad you brought up the sector though, the sector part, because that will always get the news. The tech, or what would you say? What was the other one?
Tech and comm.
Tech and comm.
So it's IT and comm.
Yeah. So that's always going to get the news. So guess what's going to get the investment from the people that are chasing those returns? That people go to that, right? One of the best resources I've seen, and I really enjoy showing investors to talk about low correlated assets, which, well, maybe I don't know if I should bring it up because that's another thing to talk about. But
nerd alert.
Yeah. Nerd alert. Anyway. One of the things I like to bring up is called the Callan Periodic Table. So CALLAN. I encourage you to look this up because it illustrates a really good point in exactly what we're talking about. So like I said, everyone was predicting the 10% return on the S&P 500. Well, if you look at from 2019, the S&P 500 has been in the top part of the asset class returns of everything, considering small cap, developed international, real estate, emerging market, high yield, U.S. fixed income, global ex-U.S. fixed income, and cash. It breaks all those asset classes down and it ranks them in order of their return in that year. So going back to 2019, S&P was number 1. 2020, S&P was number 2. 2021, S&P was number 1. 2022 blip, S&P was number 5. But 2023 and 2024, both S&P was number 1. And we're talking returns of 31%, 18%, 28%. The fifth place year, negative 18, and then plus 26 and plus 25. And we know this year it's plus 17. It's going to be near the top again. So that's, well, you said the recency bias. I could safely predict a 15 to 20% return in the S&P 500 in 2026 just based off that alone. But history does tell us, if you look back further, large cap's always kind of up there. But let's look at some of the other ones. For perspective, from 2003 to 2007, it wasn't the S&P 500 number 1, it was emerging markets, if you would believe that. From 2003 to 2007, it was number 1, except for 2006, it was number 2. So Omen, let me ask you this. What do you think after that run from 2003 to 2007, what was emerging markets ranked in 2008?
I guess it was much higher, actually, globally, just based on what was happening in the U.S.
I love this. I would have guessed the same thing. Dead last.
Really?
Yeah.
Interesting.
Yeah. This illustrates my point, because I would have said the same thing. Everyone was focused on real estate at that time. And here we have this happening as well. You can't predict this stuff. And if you had gone into 2008 and said, hey, I'm all in on emerging markets, you would have had a return of negative 53.33% in 2008. Whoa. You would have lost over half your investment if you moved everything to, he's like, hey, emerging markets has been on a tear for 5 years. I'm going to put everything in it. And you look at the Callan periodic table, it will show this. You'll see this over and over and over again. So to your point, the crockpot investing, because we're throwing everything in, just own a little bit of everything in certain ways. So because it kind of, it does have that historical return, historical risk. You can match those, put those together to align with your overall goals. I want to wrap this up. There's some key takeaways, but one last thing. To quote our friend Brian O'Neill from Winged Wealth, when asked about market predictions, if you're trying to market forecast and market predictions, his reply is, remember that the sole reason for forecasting is to make astrology look respectable. It's so true. Perfect. Perfect. Yeah. Anyway, so we talked a lot. I've talked a lot about this. There are some key points here before we get into our interview with Brandon.
Yeah. So number one, when you hear past performance is not indicative of future results, that's the reason why that disclaimer is in every investment material. I mean, we have it in our own disclaimer in this show. That's why that's there. Do not rely on past performance to indicate what the future will hold for that particular investment. So that's number one. Number two, recency bias is definitely a thing. So if you look back and think, man, 2025 was so good, like, how could I go wrong? Well, we don't know what's going to happen in 2026. So, and don't forget that the US was not doing all that well in the 2000s, like the odd 2000s, right? There was a lot of things going on in both the .com bubble and in the housing markets that there were other areas that were doing a lot better outside of the US. So it wasn't all that long ago. We just have a short-term memory. And then the last key takeaway for the news article here is get in, stay in, and just adjust your risk for what is appropriate to you every single year.
Well said. This is going to be a long episode, which is totally worth it. That's a lot of great info, and I know Brandon's going to have a lot to share. So without further ado, let's bring Brandon into the Foxhole. We are really excited to welcome back to the Foxhole an old friend and a previous contributor to the podcast, Brandon Lovingier. Welcome, Brandon.
Hey, yeah, thanks for having me. It's fun to jump back on here and kind of do a continuation of last episode we did.
We talked to you in episode 3. That was the previous episode where we talked about staying in the military, the reasons why you would stay until 20, and we kind of broke that down. If you listen to that episode, you're already familiar with Brandon, but if you watched any clips from it, you would not be familiar because Brandon, you look a lot different today than you did the last time we talked. Quite an appearance change for you.
Yeah, I'm trying on this whole beardo thing, I'm trying to, rekindle old flame with my wife. I had a goatee whenever we first started dating. And so, just kind of, bringing it back retro style.
Omen did the same thing. Did you guys get that issued to you at the VA? Is that mandatory? Is this something I have to deal with in the next few months?
Yeah,
only if you can grow one, Rob.
Your VSO. Yeah,
only if you can grow one.
I cannot. I've got a baby face. I remember in high school I had a baby face, and then I grew up well, when I grow up, and here I am, almost 50 years old. Still pretty pathetic. But yeah. I bring it up because I'm just so jealous, of rage, of envy, and jealousy. Your illustrious goatee there. Well done.
Yeah. Well, in fairness, you have more hair on the top of your head than I do. So I guess, I guess maybe I'm compensating. So we'll call it that.
It's AI. It's after, yeah, it's all edited in. Yeah. Well, that's not the only thing that's changed since we spoke to you. So we talked to you in October. That was the last episode, like I said, episode 3. But what have been the recent changes in your life? I know you moved, correct?
Yeah, so we're now relocated just right outside of Kansas City, and I have officially transitioned into being the house husband, stay-at-home, work-from-home dad, and so things are kind of shaping up. You're a little bit nervous, one of those where it's it's like the Indiana Jones moment, stepping off the ledge and hoping that the path will appear, but it's kind of all fallen into place, similar to how we wanted it a little, of course, no plan is perfect, but yeah, my wife's got a job in a field that she's been looking to get into. My son's really doing well in school. And then I'm pretty much probably over capacity as far as my side projects and all that. And then that's given me time to kind of decompress a little bit, work on my book and work on other projects and things like that. So it's been really awesome to see a long-term plan finally come into place.
Brandon, that is amazing to hear. And, frankly, I love how you described the stepping off the ledge there, because you practice this or we tell people to practice retirement before they actually get there. And we do a lot of planning around the fact that you've got these various income streams and it's going to be enough. It's going to be okay. And then you get to retirement. You're like, is it okay? But then like you're in it. And what you've described is that your wife is loving what she does. You're loving what you do, even at capacity. And it works. Like it really does work.
Yeah, no, it's pretty awesome. So I'm really excited for the next few years and see kind of how things continue to settle and shape up as time goes on.
Well, I appreciate the parallel because the last time you came in, you were in the military, right? You were still in, correct? In October, right? So, and we were talking about the 20-year decision to stay into 20. And then here we are, now you're out, and we're talking about the decisions that you would stay past 20 and kind of what's involved with that decision. So it was based on 2 articles you wrote. Like I said, the last one was the 20-year, why to stay to 20. And today we're going to talk about the other article you wrote. Can you talk a little bit about what inspired you to write these articles? Maybe give us a recap of, the one we're about to talk about today.
Yeah. So, I mean, today I think we're going to talk about, is it, worth it to stay past 20 is kind of what we're talking about. So we're under the assumption that you've already made it or you're very close to actually hitting retirement, but then maybe you're looking at a promotion potential, or maybe there's another assignment or some other thing that you're like, I just want to stay longer, or I'm thinking about staying longer. And actually, funny enough, this whole article of like, is it worth it to stay past 20 came from a question on Reddit. And I kind of wrote a response, but then I kind of realized like, dude, I just wrote an entire, like most of an article, like to this guy. Yeah. And so so that's what I was like, I'm just going to go ahead and do it, add numbers and, just make it into a full article. And so that's kind of the, what it came from. And that is something that I wrestled with, and I've talked to tons of senior NCOs and officers about this exact same decision. And I think it's probably even tougher, especially if you haven't like topped out on promotion. It's really, really tough.
This episode is brought to you by the Military Financial Advisors Association.
MFAA is a global network of independent, fee-only fiduciary financial advisors who specialize in serving military families.
And we're not just highlighting it. Omen and I are members ourselves, so we know firsthand what they stand for.
That's right. Every member of MFAA is either active duty, a veteran, or a military spouse, so they truly understand the unique financial challenges that come with military life.
Plus, every advisor must hold or be actively pursuing the CFP designation, which is the gold standard in financial planning.
So let's put that together. When you choose an advisor with MFAA, you are getting a professional who won't sell you a product, who knows the military life, and will plan using your hard-earned military benefits.
Whether you're navigating a step out of the military after 4 years, a military retirement, or a transition into a work-optional lifestyle, MFAA advisors speak your language.
Visit militaryfinancialadvisors.org to find an advisor who fits your mission.
MFAA, real advice, real experience.
This advertisement is for informational purposes only and does not constitute financial, legal, or tax advice. All investing involves risk, including the loss of principal. Information and opinions provided within the fiscal foxhole do not necessarily reflect official positions or opinions of the Military Financial Advisors Association or its members. Consult a qualified financial professional before making any financial decisions.
Well, spoiler alert for the listeners, Brandon obviously did not stay past 20. Well, you stayed, 8 months, you said, past 20? Yeah.
Yeah, I had to stay a little bit.
Yeah.
Yeah, I had an active duty service obligation I had to fulfill, but it was pretty good timing. So yeah, an extra 8 months for an extra promotion wasn't the end of the world. And really I couldn't have done anything else other than get promoted just because of the time frame.
So your answer to the question is no. It wasn't worth it. End of interview. Thank you for coming today. Yeah. Yeah. Well, in the article, the way you lead into it, I think was really interesting. Now, Omen brought up the fact that, he highlighted here the questions that you kind of lead with. And I thought that was a really interesting place to start.
Yeah. And Brandon, this is, again, this hits home, right? This is, I think, something that many, if not all military members who reach that 20-year mark fight with internally, at least, of, man, this deal is so sweet. I could get, 2.5% more per year, or I could get another promotion and that 2.5% per year, or 2.0 if you're on BRS. But you lead this article a little bit differently, starting with the non-financial implications of what it means to stay in. And so there's a list that you have here. And I love the question that you lead in is money aside, would I choose to stay in? Can you talk to us about that a little bit?
Whenever I'm talking with anybody at any stage in their career, is really just boils down to like, what do you want? Like, what do you personally want? And you're able to insert that into the process. I think we get caught up in like the selfless service, component a lot of like, oh, well, people need me, or I'm doing a good job, or my family, this would be better for my family financially, or all that. But it's like, well, if, like, hey, look, you have to make a decision today. Like, is this what you would continue to choose every single day? Or is there something else that you might like to do more? And that's a tough one, because for me, I love helping soldiers. I love that aspect of it, the mentorship and all those kinds of things. But everything else I could leave. And so, it's like, okay, well, is what I'm doing after the service exclusive of that? Like, is there another way that I could do that? Or, or is there's some other way to fulfill that need that I have? And so I think it's just, yeah, it's a really tough one. But I think if you don't ask that question first, you can get caught up in the numbers really quick and go, well, yeah, just financially, it's like, so I think you have to, get those emotions out first.
Yeah.
I like the way you lead with the purpose of why you're making this decision to begin with, or what you would go to, or what's at the core of the decision. I'm curious, when did you know that the pull to do something else was more than just a thought, or maybe was actually had significant weight to it, enough to bring it into this thought process of staying past 20 versus getting out and pursuing this? Like, how do you know that it's substantial versus just maybe a whim or a fleeting interest?
I think that's a tough one, but I mean, for me, I just always like have these frustrations and like, okay, well, there's nothing I can do to change this. Like, whenever I feel powerless to make a difference, that's when I really have a hard time kind of continuing down that road. And a lot of times the conclusion I've come to, if I'm going to help people, I need to do that outside of the organization, not within the organization, because just the way that the military is structured and all that. And then also thinking about like, what are the things that light me up, and what percentage of my day is going to be that moving forward. And for me, the higher up I go, the lower that percentage is. Like, my actual like direct impact is lower and lower and lower. And you get burdened down with all the administrative gobbledygook that has no bearing on actual mission performance, actual personal performance, and actually impacting people's lives. And so I think that made it a lot easier for me to go, hey, you know what? A lot of this stuff that I'm playing around with outside of my Army life, like the enlisted money stuff, all that, like, I feel that impact. And then like getting to see, oh, thousands of people read what I wrote or watch what I put out on YouTube or whatever. It's like, okay, well, there's potential there. If I did this kind of stuff full time, like, I could reach so many more people than I could if I was, even at the highest level of, my career field. I'm signal, so I'm never going to be sergeant major of the Army. And even then, even enlisted side, like, I'm never more than just an advisor. Like, I don't get to make any decisions. And so it's like, well, if I go outside, I can hopefully bring information and things like that to the forefront and be part of the conversation, the bigger conversation that actually creates real meaningful change for service members. And I feel like that's what really kind of led me to go, you know what, like, the bigger impact, the bigger play here is to get on the outside. But then also too, the personal aspects of it of, okay, well, my son's very young. I think we talked about this on the last episode. Like, my mom passed away when she was 55. And so it's like, that gives you a punch of perspective, I guess you would say, or I think what I typically call it is a morbid gift of like, okay, if this was your last decade, like, is this what you would be doing? And over again, the answer to that question was no, it would not.
Your response there, what I want to draw out from that is very personal in terms of how you framed the impact that you personally have or felt you had on the troops that you led. And I think that that can be also translated to anybody else who perceives that the impact that they're having on the troops that they lead might actually mean that they stay in the service because that's where they have the most impact. And so a very personal decision that you've brought out that is not financial at all. This is your decision of where do you feel like you have the most impact in or out of the service. Something else I wanted to draw out of that too was the family side of things that you've already started to bring out. There's this nuance amongst nuances when you click over the 20-year mark where suddenly because it becomes your decision, it changes the conversation with the people in your life. I distinctly remember previous to 20 years, you're just kind of dragging the family along because that's what you have to do. Like you have to get to that 20-year mark and you're dragging people along to do it. Once you click over that 20-year mark, now it's a choice. And so what did those conversations sound like in your house?
For us, we started having conversations a lot sooner than I think most people. Like I kind of had been thinking about this, and I've always kind of played around outside and just because of who I am. I just got interested in stuff. And actually I wasn't planning on building, like nothing that I'm doing now did I even know existed 6-7 years ago whenever I started kind of looking at getting into personal finance stuff. And so I guess you would say I was just led there at a certain point in time. But those conversations really were like, okay, well, what can we not do that we want to do now? And then what do we want that to look like? And we're still kind of working on it, to be quite honest. I mean, this is all we've known. Like I joined at 18 and we got married when I was 19. So basically, the Army is the only thing we've ever known. And so having that choice and kind of to your point of like, okay, well now it's on us. Like before it was like, okay, well, yep, this is what we were told. All right, Kuwait or Korea. All right. Okay. I guess we're going to Korea. Like those kinds of decisions are, I guess, a little bit simpler because they're force fed. But I've talked to a lot of senior NCOs that really struggled with that of like, oh, well, yeah, like I like what I'm doing and like I feel like, an impact. But then like there's some that like I just in my heart, I'm like, oh my gosh, that is the worst thing you could do for your family. It might be the, like career impact and stuff like that. But like people choosing to live separately, like their spouse is in a great career and all that, and they don't want to move again. So then like, okay, well now we're going to have split household for, a number of years or whatnot. And I'm like, man, I've seen it go wrong so many times, and it breaks my heart to see, that kind of decision being made especially whenever I know they haven't spent a lot of time talking it through. Like it's almost a knee-jerk reaction sometimes. And actually the system kind of creates that just because of like, especially, extremely, like high ranking folks or whatnot. You're doing it, it's kind of an interview process, and then either you get selected for the next thing or you retire. And then, but either way, it's like, I don't know, it feels unfair to me. Like that control gets taken away from you the higher up you go. I personally feel it's a terrible way to treat our most senior people that have spent so much time in the services. But that's kind of a side note. But it's tough, especially whenever it's the only thing you've known.
I feel like we owe our listeners an apology on behalf of Brandon for the 6-7 reference. If you're driving with kids, if you had to pause it or drive off the road with rage because your kids reacted to that, apologies.
What did I do? Oh, the hands.
Oh, you didn't do the hands. You said it was like, I think you said, yeah, I think you were talking about when this dawned on you that you were really good at this. The money thing was 6 or 7 years ago, or it dawned on you that this existed. So, guys, as a parent, I'm just like, living with this with teenagers, this all I hear. After that, I my ears just tinnitus kicked in and I heard nothing else. Yeah. But speaking of numbers, you've done a really good job of capturing the value side, right? The purpose and the value of the qualitative part of this decision, which I love because you lead with it, right? And even more so, it wasn't like I want to be a financial influencer, expert, planner, advisor. You were like, no, I want to change people's lives. I want to help people. That's where you started with. And then it branched out into how I could do it. In the article, you did bring the numbers into play, which I really like. And this is a fiscal podcast. So let's talk about that, those calculations. You did some stuff, and we don't need to get too much in the weeds, but there were some significant differences when you were weighing the options of getting out or staying in one more year in perpetuity.
The scenario that I did in the article, I think we ended up, basically, hey, if you were looking at going between E8 and E9 is I think what, I think that was what it was. And that would have been, similar for me, like I retiring as an E8. And it's tough too, when you're going to be competitive. Like, I mean, just for context, I mean, maybe, I don't know how all the services, but for the Army, like I was OML #1 whenever I got promoted to Master Sergeant. So like, I know I would be very competitive for the next, for the next level. So, to know that I like, not to toot my own horn, but like, just to know like that was, I'm not going to lie, that kind of eats at you a little bit. It's like, oh, I know I'd be competitive. I know I'd be competitive. But, and I think I put this in the article too, but I think of it of like tying yourself to the mast, like Odysseus, with the sirens or whatever, like, because like whenever because there's just so much attached to it. There's, not just the money side, but the prestige and like being able to say, I'm a retired sergeant major versus I'm a retired master sergeant. It's a pretty significant difference. But for me, that wasn't the most important thing. And then looking at the numbers, it's significant. I think in the scenario I had, it was like right around $540,000 of total benefit over the course of my potential lifetime. Yeah. And that sounds like a huge number. I mean, that's $500,000. Like, you're going to give up $500,000. And it's like, well, okay. But what could we do? And that's where the financial planning stuff comes in. It's like, well, what can we do to make up for that? And oh, by the way, do you actually need that money? Yes. How do you know that you actually need that, that money coming in? And for most people that I've talked to, they don't know. They don't even know how much money. If I put a gun to their head and said, hey, tell me exactly how much money you have to live on every month, they couldn't tell me. They might be able to give me a rough figure, but most people can't say, oh, I need, $6,300 to live on every single month. Like, most people can't tell me that. And until you can sit down and do that, we can't answer the question of, do you actually need this money? And for me, if you don't need the money, then the numbers don't matter. And so that's kind of why I lead, in the beginning of like, okay, well, what do you want? Do you actually need this money? And if so, okay, then that's a different problem set than, okay, no, I don't need the money. Well, if you don't need the money, then you need to revert back to to step one of like, what do you actually want? And then and also too, just knowing like, you deserve to be able to choose what you want. Like, you've done enough. 20 years is phenomenal. Like, you've done more for your country than 99% of all Americans will ever even think about doing. So you have done enough. Nobody needs anything more from you. And actually, I think from, just a patriotism perspective, I think the best thing for you to do is live your best life, because then that makes you a great example for what the military can do for young people. So, but if you keep going and you burn out, well, that's a much different story to tell than, hey, like, look, I knew it was the right time to leave. I got out at 20 or 22 or whatever it was. And then I've been living my best life since. Like, that's the best recruiting poster we could ever come up with. Not, oh, well, yeah, I just kept staying and then I got hurt and then I just kind of got forced to go out and like, I didn't really need the money anyway, but I just felt like I needed to keep going. Like, it's a much different conversation. I say all that to say, okay, we have this number. Well, what could we do in that 3 years difference? Like, you've got a 3-year window that, if you make the right choices, you could completely make up that difference or maybe even far surpass that. So that's kind of where I was headed in the article.
I actually thought, Brandon, you were going to double down on the 6-7 reference and say, $7,000 each month. I don't know. But yeah. that aside.
Should have.
We're so trendy. Yeah.
Yeah. We're only a couple months behind. That aside, we've talked about, you wrote another article on this. You had an interview with Eric Baskin, who we've also had on the podcast about this. Yeah. Rob and I did several podcasts about this, about knowing your expenses. Like you
Mhm.
have to track all this stuff. You can't put your head in the sand about how much money is going out of. Clearly, everybody knows how much, and they like how much money is going into their checking account each month,
Hmm.
but they don't know how much is actually going out and how much it costs them to live. So,
Yeah.
yes, we'll re-emphasize the point of know how much money it actually costs you to live your life, the ideal life that you'd like to live. That is a fantastic starting point there. You start
Yeah.
to break down the math in a way that I think everybody has before. Like I said, who hasn't built the Excel spreadsheet with, all the years of service it would take to get the certain amounts of money? And wow, that looks great. But then
Hmm.
you start doing those internal calculations of, okay, if I got selected for promotion, that means 1 year plus another year to actually pin it on. And then that's another 3 year payback somewhere. And that means I have to do another, like all these calculations in your head about what the service amount actually costs. And I don't know what you think. For me, there could have been an aspect of like, oh, that feels like I'm going to have to grind it out for that much
Hmm.
longer for it to be worth it. And a lot can happen in the 3, 4, or 5 years that it takes to get to that point.
Yeah, I mean, and that's one of those where, yeah, you can step sell yourself into staying longer and longer and longer. And if you don't know like what's the real benefit here? Like it would be different if it's like, okay, look, I absolutely love what I'm doing. My family loves this lifestyle, all that, that's a much different thing. But yeah, I mean, I see it all the time. Like we kind of say like, for sergeant major, like, okay, well, you make the list, and then you've got a year roughly of school, then you're gonna take a staff job somewhere, and then like you can't just quit before being a command sergeant major. So then you're gonna go and compete and get another assignment. So then pretty soon you've not just added 3 years, you've added 6 or 7 years to your total service whenever you just couldn't let go of that promotion. And I think what I came up with is like you could literally have to just do like an extra like what $3,300 a year or something like that saved back for the next 20 years, and that makes up the difference. So like whenever you extrapolate it over the course of your lifetime, it's not a major shift in your savings rate or what you're doing. And there's a lot of other benefits that you may have, like having a spouse be able to work or VA disability compensation or different things like that that you may have coming in as an additional income stream that really just makes that extra money that you would have gotten from a promotion or an additional multiplier like a moot point.
We did an episode last month about it was Trevor asking the question about what compensation do I need to the equivalent of getting out of the military,
Mhm.
and we dove in. We did a whole like 40 minutes on it, and Brandon, I know you listened to it because you listened to all the episodes, right? But yeah, we broke down because it's not really clear. You do a good of a job, as I've seen, breaking down kind of a difference. You dive into your exact scenario, break it down and the difference, and then you also acknowledge that it's not just dollars in one side and dollars on the other side. That there's this grind it out, like you just talked about. You kind of have to either stay and grind it out, but then you're acknowledging there's another grind it out on the other side that you say you have to account for. Okay, well, we're just going to have to get a job that pays this much. We have to save this much to account for the difference of getting out. It's not just a $500,000 question, because if you do that, then the answer is like, yeah, they'll stay for another three for $500,000. There's a lot that goes into this. I think one of the interesting things, and we don't have any written down here, is some I always thought when you hit 20, is there's also just kind of an implied perspective that you're suddenly working for less, right? I mean, of course, your pay is going up as you increase, but now if you get out, you've got the pension waiting for you, possible disability. So the difference between what you're currently getting paid and what's waiting for you, that's really what we're working for, right?
The important differentiator there is like, do you already know what you're going to do next? Because you can say that. Like for me, I can say that because I know what I'm doing next, and I've already been building this business and all that. Like so, I just know like the numbers work. I just need to dial this up, and I can increase my income. But if there's a lot of unknowns and you haven't been actually looking at what you want to do, and you're like, oh yeah, I'll just get out and become a defense contractor, or I'll just get a GS position or whatever. That's a little bit different because you don't already have that thing established. And not saying you couldn't, because a lot of people do. And if you're competitive for promotion within the military, you're going to be competitive wherever you go. There's something about people that are high performers in the military that just continue to be high performers wherever they go, whatever it is they choose to do. I think that's kind of a caveat to that conversation. But the way I think about it is like for my pension, basically I've got a $15 an hour job that I never have to show up to, and just it just keeps coming in every single month, and so that's kind of a big deal. If you can learn what your expenses are and you can keep your expenses lower, at least closer to that, well then that gives you a lot of freedom to try some different things out. Maybe you don't really know, or you think you know what you want to do next, but the ability to add that in on top of it makes that career even more valuable to you.
I don't know if you listen to Benjamin Brandt or not, but he's pretty famous for saying, don't retire from a career, retire to a career, right?
Hmm.
And just that mindset difference of knowing what you're about to get into. If you continue to go past 20 in the military, and this isn't for anybody who loves the military, whose family loves the military, like this is, as long as you're having these discussions ahead of time and you figure out that you love the military and that's what you want to continue to do, go do that. Like that's amazing. If you're feeling a little bit worn down and feel like you would like to just kind of move on to something else, this is really the core of the discussion of understanding what it is that you think you want to do next to then figure out, based on the expenses and based on what you get for just breathing, as you mentioned, like at $15 an hour, you
Yeah.
breathe and you're getting $40,000 a year. Like that's great. So, determining what you want to actually retire to, and you can start to rehearse that ahead of time. And we've talked about rehearsing your retirement before you hit 20. Start to explore those careers through education, through internships, through night classes, through whatever the thing is that you can get exposure to that next career. That is certainly a path that we would recommend.
And yeah, that's one of those too where I think it's been really helpful to kind of build some things on the side while I've been in, because I do know what I'm retiring to, and that has made a world of difference. Like I've got a whole group of us. There's several of us that are retiring around the same time, and we're in like we've got our DD 214 chat, and so within there, like out of everybody, like I'm at the top of the class when it comes to what I'm retiring to. Like a lot of them are figuring it out now, but I feel their anxiety and what that feels like for them of like, oh, well, I don't know what I'm doing next, and I got to do this, and I'm like, okay, well, I've kind of already been working on that and really done probably a lot more internal work than I realize, of just kind of figuring out like, okay, what do I like, what do I want to do, and where do I do my best work? Because I think that helps out a lot with that retiring two pieces, just kind of play around and go explore. Like I've taken leave and gone to conferences. I mean, that's where I've met both of you, is going out and just interacting with other people in places where you might want to go work. And that's made such a huge impact.
I think between you bring up a really good point in getting ready for whatever it is, because Brandon, you mentioned earlier, a lot of people get out and they have that contracting job waiting for them. Omen, you had that offer for you on the table. I did not, because my career field wasn't as lucrative, really. I could just say it like that. So there's a few different ways to go about it. You're doing a career change. So is Omen, so is myself. And I've found, especially being closer to 50, as I explored that space, that it was really interesting going out and being like, hey, I'm willing to be a brand new employee starting out at the ground level. This is back when I was like, well, I might start my own firm, or I might, maybe go out and just be employee. Yeah, people didn't know what to do with me. They're like, hey, we've got this established person that's got a full career in the Army, and he wants to start at the ground level and learn. Even though I was comfortable with it, I got the feeling that they weren't quite so sure. So it kind of quickly led me to the decision I made. So Brandon, in an age where we like to pretend there's no age discrimination, but we know that inherently there probably is. Like, what do you say to folks that are, maybe they're unknown? They're unknown on both sides, right? I don't know if I'm going to get promoted, and I also don't know how lucrative or valid my chosen career field is going to be on the outside, and they're staring at that opaque options in front of them. Like, what's your best advice regarding that decision?
Yeah, I think it's one of those, like, we all have to kind of play around with that. And yeah, I mean, you can end up what was that old movie with Kevin Spacey where like he's like middle aged and goes works in the drive through as an American Beauty or something like that.
Yep, that's
Like
right. Yeah.
you
Yeah.
don't necessarily need to go like full midlife crisis like but also too, it is a little bit of a like kind of a new chapter, a new kind of exploration. And yeah, to your point, yeah, I'm kind of more toward midlife and definitely at the latter half of, a typical working career, so to speak. But I think that's one of those where you can turn the perceived flaw into a feature and you can go into somewhere and go, well, hey, the most powerful thing about me is I'm not a kid. I am a newcomer, but I'm coming in with perspective that's going to allow me to ask really good questions. And the net benefit of that is I'm not scared to ask them. Like the younger folks might see something and notice a few different things that maybe aren't great, but I think they would be scared to say anything because they need this job. Whereas if you've got kind of that backstop of like, okay, I've got the pension coming in, I've got healthcare covered, like I don't need this as bad as I did whenever I was younger. But being humble enough to know like, okay, I am a newcomer in this field. If you're doing a career change, not everybody's going to do a complete career change. There may be a tangential field or job that you can get into that it's like just another pool you're swimming in. But that may not, like for me, I'm not doing anything related to anything that I did specifically in the Army. I did satellite communications, so I guess you could say, precision, whatever, you could work the marketing piece there, but for the most part, sine waves are not that applicable to, working a retirement plan per se. But there's those skills that you learn. And I think probably the most important one is just like in the military, your figure it out muscle is so much stronger than everybody else's out there because that's just what we've been trained to do. Just figure it out, just figure it out, just figure it out. And this next thing of like the job and all that, it's the same. You just have to figure it out. And you will if you're committed to it. But I think, being able to go in there and then just have that confidence to say no to some jobs and things like that maybe you would have been feeling pressure to take earlier in your life. You can go, no, you know what? That's not the right opportunity for me, all that. Now, of course, having your finances squared away before you get out definitely helps out with that. Having a little bit of a emergency fund, a little cushion, things like that, that definitely helps give you even more confidence to be able to do that. But I think it's one of those where you have to look at it as what it is. I mean, it's an encore career. You are a newcomer, but you're not a newbie. You're a full grown adult.
Yeah.
It says you.
Yeah. With the goatee at age 17. When did you join?
Yeah.
So I did want to emphasize too for those listening who haven't retired yet and who are maybe hesitant to take the leap into a different career, that the pension and potential disability and definitely the healthcare benefits that come with retirement pave a pretty long runway for your ability to be able to do a 180 out and go explore something completely different. It certainly helps to have that in mind before you retire. But I love what you said there, that having all of your finances in order allow you to do that. And if you're like Rob, who's already apparently pulling Social Security, it gives you a really good runway.
Nice. Yeah, I'm getting $20 a month. It's a little bit of a deduction when you start taking it at 48, but it's still there. Well, listen, Brandon, we really appreciate you've clearly built a lot of wisdom over the years from the research and your experience from, going up to 20 and the deciding to get out at 20 versus staying in and everything you had. I think you've really laid out a really clear picture for folks. If anything, a lot to think about as it applies to their life and the tools that they could use when making that decision. I forgot to mention earlier, I'm going to link both those articles, the one we talked about today, and of course, the one we talked about in episode 3, in addition to, obviously your information, which we'll get to here momentarily. But first, we've got some business to take care of. Now it's time on the Foxhole where we are going to move on to our trivia challenge, which is the ongoing battle between myself and Omen. Now, what we've instituted recently is we're holding the score offline. So rather than the last one. Last year we talked about the score and I was humiliated every single week when Omen was kicking my butt. But so this time we're actually going to hold the score offline.
2 points.
But we're going to hold the score offline, and then we're actually building up to a kind of a game at the end of the year for our listeners. But today you are playing for me, Brandon. So before Omen asks this question, a really important question for you. What was your ASVAB score? I want to know what degree of confidence to have here. I'm just kidding.
I believe it was an 89. So yeah, so pretty good, I think. Yeah. So,
yeah,
but I think isn't it regional?
Nerd.
Like I'm from middle of nowhere, so it was like there's like 3 people that took it or whatever. So yeah. But
I asked the question as a joke, but the fact that you knew it actually gives me a lot of confidence. So my expectations are very high because you're playing for me. So if you get this right, it is my point that I get to carry forward on behalf of the Army and enlisted folks everywhere. So. Omen, if you would, please lead us into the question of the day for Brandon.
Good thing my question is subjective. Can't wait. All right, here we go. Brandon, purely hypothetical. Which MRE entree consistently ranks as the top troop favorite? Is it chili mac, beef stew, Southwest chicken, or spaghetti?
Hold on. Wait, which service? Like
no.
Like, is this Marines where like they're just eating the ketchup packets, or is this like every branch?
Every branch does this the same. I guarantee it.
Okay.
I've been on joint deployments.
Gotcha.
It's the same.
All right, go ahead.
yeah, it's like I don't know if I've ever had this Southwest chicken. That sounds good. Like I don't know, the marketing's better for that than chili mac.
Fun fact. Southwest chicken was my Christmas Eve dinner in Afghanistan 2001.
Nice.
Yeah.
And you said memories couldn't be made in the military.
I know.
So I don't know. Yeah, this one's tough. Yeah, because I feel like it would be pretty close between the beef stew and the chili mac. But I also know that beef stew cold is not as good as the chili mac cold. So I'm thinking chili mac.
Is that your final answer?
Yep, I'm going with it. I'm committing.
All right. Well, Brandon, you've just gotten Rob a point.
Yes, let's go. I am a winner. I can do this.
Keep telling yourself that, Rob.
Yeah.
Keep telling yourself that.
Yeah. Well, yeah, you have your little stick-it note on your computer.
Yeah.
Like, I'm a winner.
Oh, man.
Oh, guys, I got to tell you, this feels good. I didn't even know I was in this thing. So I just want to thank my parents. I want to thank God. I want to thank. Well done, Brandon. Really appreciate it. Nice. Well done.
You're welcome. Glad I could get you on the board right away.
How many desperate cold chili mac meals have you eaten in your life? Just curious.
A few.
So sad. Like nothing more than a cold MRE. Like I'm not even going to take the time to dump water in the heating packet and wait 10 minutes. Like I don't even deserve it. Right. I'm just going to cut a small hole in the pouch to squeeze it in my mouth.
Yeah. Well, that's like, well, you do the heater to warm up a little bit of water so you can have lukewarm coffee real quick after you eat the cold chili mac. So that was, or at least that was how I did it.
Heaters, man, we had to take the heaters out. That's too much weight.
Before I let you go, I have to share this because this is the saddest thing you'll ever hear in your life. At basic training one day, I got so desperate for coffee like week 8 that I stole the coffee packet out of an MRE from a field exercise, kept it with me, total contraband, against the rules, right? And then the next day I woke up at 3, like an hour before we were supposed to wake up for PT, went into the bathroom, waited till the tap got as warm as it was going to get, which is not very warm, mixed the instant coffee in a canteen cup and sat in a bathroom stall and drank it. That's how desperate I was for coffee.
This is why like my wife doesn't understand this, but my tolerance level for coffee is pretty wide based on stories just like that. Yeah. So
Rob's freebasing instant coffee in the bathroom.
Whatever it takes. All right. Oh, well, Brandon, thank you again for all your wisdom and for getting me a point. Hopefully I won't let you down in the future episodes. But before we let you go, as we send you on your way, can you please just give the listeners an idea where to find you, what you have to offer, how to get a hold of you, et cetera?
Yeah, the easiest way to find me is just go to enlistedmoney.com, and then there's links to all kinds of things there. But probably where I put out, I think the best content is in my newsletter or my YouTube channel. And so those are kind of the places I love to connect with people the most. But yeah, everything starts at enlistedmoney.com. Yeah, no, I really appreciate you guys having me on. It's always fun to talk to you guys, and yeah, really excited for everything you guys do moving forward.
Thanks, bud. We'll see you again soon. Okay. Omen, as we build our businesses, and we get to know people and colleagues in this space, and especially all the military people that are specialized in the military finance, like we do, there's certain people that emerge as like, I'm really glad I know this person, their expertise. That's why we brought Eric Baskin in. We're going to bring Lacey Langford. We had Heather Walrath and all these experts. Brandon is just one of those guys. It's first of all, so easy to talk to, but I'm just so grateful for his experience and knowledge. He's built this, over time, and he really knows his stuff. And he's so willing to share everything that's really personal about his life. It's really nice.
Brandon is really a reflection of the reason why I love our community within MFAA, within MQFP. Like, there's just this willingness to help others, to serve others. And Brandon has no qualms about that whatsoever. He is a mainstay in this community of somebody who just likes to help, and he is willing to give out whatever information he possibly can to anybody.
Yeah. I mean, I can't endorse him enough. So please, if you're interested, which you are, you're listening to this, so please go look up Enlisted Money Guy, follow his stuff, read his blogs, just an infinite source of knowledge, right? I think I've called him the Enlisted Money Guy before. It's just Enlisted Money, right? So go look it up. If you enjoy this, you're gonna enjoy the stuff he puts out. Read his blog, enjoy his expertise, and of course his personality, which is wonderful. So, but for now, that's a long episode, a lot in there that is worth taking away. So, but let's go ahead and wrap this up. We really hope you took away something that you can use in your life. We appreciate you hanging out with us. Please like, share, subscribe. Tell others that might be interested in the podcast. Share the news. Let them have a listen and gather some of this great info that we're bringing, and of course that all of our friends that are coming into the fold. But for today, Omen, what are our main takeaways from today?
All right, here we go. 2025 reinforced that the markets rarely follow forecasts, and short-term fear is not a strategy. Staying invested through uncertainty mattered more than timing, predictions, or reacting to recent performance. Key takeaway number 2, the financial upside of one or more promotions or a few extra years is often smaller than it appears and can frequently be offset by earlier career flexibility, additional income streams, and disciplined saving. In many cases, retiring sooner creates more options, not fewer. And the last one, decisions about staying in or getting out should start with values, purpose, and family impact, not money. If you would not choose to stay absent rank, pay, or pension math, that hesitation is your signal to pause and reassess.
We'd love to hear from you. If you have questions you'd like answered on the show, please send us a note to fiscalfoxhole@gmail.com. If you heard something today that you'd like to discuss further, or you just want to dig deeper into your own financial game plan, both Rob and Omen are accepting new clients and always happy to chat. You'll find the links to their websites or to book appointments in the show notes. Rob Moore and Omen Quelvog are both registered investment advisor representatives. This podcast is for educational and entertainment purposes only. While they are both advisors, they are not your advisors. Therefore, nothing you hear on Fiscal Foxhole should be taken as specific investment, legal, or tax advice. For guidance tailored to your situation, please consult a qualified professional who understands your individual circumstances.
As we move into off duty here, I went to the truck and got some fresh coffee to bring back the foxhole in my foxhole mug.
I can't see what you got there.
Foxhole mug.
Oh, it's the foxhole mug.
Yeah, a friend of mine.
Where did you get?
Yeah, it's a specific. I believe it's an Etsy shop, right? Yeah. Megan, thank you again, you and Megan, for this. For listeners, it's a really nice mug with our logo us knuckleheads in the foxhole and the branding, etc. on it. So I've been enjoying that. I really appreciate it.
You know, that is a one of a kind gift. There is no other like that in the world.
Oh
So
man.
don't break it.
So when we have
I don't even have one.
Oh, I feel special now. Now I'm gonna drink from it every time, just to rub it in your face. Yeah.
Yeah, I need
When we get the store going, you know, where the hats and the mugs and t-shirts, etc. Then Megan's gonna have to ramp up production.
Well, hey, I was looking at our reviews, and we have this really kind 5-star review by someone with the handle Lovingier. Lovingier.
Sounds familiar.
Sounds familiar.
Yeah.
Weird.
Yeah.
I don't know where that came from.
Yeah.
But I thought I'd read it. It's a really good review. If you like a blend of humor and great information, you definitely need to check out Fiscal Foxhole. It's a blend of Stacking Benjamins style humor with real world knowledge from actual financial planners. It's a must for military and veterans. Very kind of Brandon to drop us a review.
I guess our kindness, we're buttering him up a lot during the episode. So I guess that paid off. Like he felt indebted.
That's right.
At least to drop a nice thing about us. Yeah. Thanks, Brandon. Appreciate that. It's really kind of you. I'm glad he threw the Stacking Benjamins in there. We use that as inspiration for kind of how we structure this. So if you're into finances, like, if you're listening and you're into finances, that's another really good one. Stacking Benjamins, they're obviously way more established, been around for quite a while. And I listened to it. Really good stuff.
1,400 plus episodes, I think.
Yeah.
Something like that.
Yeah.
Like we might get there one day. We'll see.
Yeah, it's good. Yeah. Just 1 week at a time. We'll get there. Earlier in the podcast, we talked about New Year's resolutions and Quitter's Day, right? I got a new one for you from me, the new resolution. I get most of my feedback as far as how we need to proceed with these episodes in listening to the ones as we edit them. So we edit them, proof them, listen to them. I realized in the last episode, for some reason, I kept saying, yep, over and over again while you were talking. So instead of interrupting you, yeah, exactly. So instead of interrupting you, which I got better at, now I'm just dropping these noises in, and I don't know where it came from. I don't know why, but now I was listening. It was just driving me crazy. I'm like, okay, gotta stop doing that. New resolution.
Well, I was picking up on that. Yeah, no, I was picking up on that too. And that's exactly what I thought. I was thinking as I was listening to the episode, like, I think that he is using as his crutch or his speed bump to not interrupting me. So for every he actually has something he wants to say, and he's just not saying it in this moment. Like, this is your self-control at work, just with a little
That's a good theory. Probably true. But my best theory is because I had young kids. They're teenagers now, but even my 13-year-old, sometimes he's telling me a story and I feel like he needs validation that I'm listening to him the whole time. So he'll say, today at school, there's some pauses and he has some up talk. So there's like almost asking a question, some pauses. I get the feeling like he's trying to draw some sort of validation that I'm listening. So I'll say that a lot, like, okay. Oh, that's interesting. Maybe that's it. I don't think you're doing that at all. I think that might be just a tick that erupted and I've got to cleanse from my behavior. But while I'm in the midst of self-reflection and correction, I've noticed you don't have any. You haven't mentioned anything that you want to do different about your performance on the podcast.
I would love to change something, and I don't know if I can change it. And that is the pace at which I speak. Like, I intentionally have to go up to 1.3 just to feel like I am speaking at a pace that keeps up with normal human beings. So I don't know. I don't know if I can fix that. Like, yeah.
I agree with you there. It's pretty nice. It's pretty good. It's a good difference between us. Do I sound terrible at 1.3? By the way, I haven't done it.
Nope.
Yeah. No, it doesn't sound bad.
And Megan listened to a couple of the episodes too, because she loves it when I get things wrong in a funny way. So, like, I don't know, a couple episodes ago, I said, get all your eggs in a row.
I noticed that.
She said, did you actually mean like ducks in a row? It's like, yeah, that's what I mean. But I do that all the time. Like, I literally do that all the time. So she now finds that quirk adoring. So she takes the opportunity to poke fun and then move on.
Eat my rubber, burn dust.
That's right. Dude, you got to bring it around to Christmas movies again.
I can't help it.
It's over. Get over it. We're in January.
Yeah. Well,
There's already 365 days in the month of January. Like, I don't want to hang out in December any longer than I have to.
Fair enough. I did move on real quick before I let you go here. I did move on from watching Christmas movies. I started Landman this second season. You and Megan, have you watched season 1?
I haven't watched it. No.
It's really good. It's really good. Yeah,
Okay.
highly recommend. Well done, well written, well acted. Yeah, I really enjoyed this one. I've watched the first 2 episodes, gripped me back in right away. I'm not huge like series, I don't watch a ton of TV. It might sound like that with the Christmas movie thing, but it's so good. Really highly recommend. Check it out. It's on Paramount Plus, I think so when you get around to it, Landman, check it out.
We'll add it to the list.